This video is entitled The Head and Shoulders Trifecta on the Dow Jones. And a head and shoulders pattern is one that is a bearish looking pattern. And this is an example of one on the screen. We can see the left shoulder, this would be a head, this would be a right shoulder. Generally what happens within these patterns is after you complete the left shoulder, you get a significant rally that takes out this high. And then you get a big sell-off, and the buyers don't come in with as much conviction, usually matching the level that it did within the left shoulder, and then a breakdown of the neckline, which is the support levels it establishes, can mean much further selling. And right now there is 3 head and shoulders patterns that are in the process of becoming formed on 3 different time frames. This is the first one. This is the shortest of the 3 for time frames, as its pattern has been basically about a week in duration. The left shoulder is right in here. Then you got a head pattern, which brings us down here, and then the right shoulder. Now the neckline on this particular pattern is roughly at about 99.50. It has not taken that level out yet. You need 4 touches of it, which is 1, 2, 3, and we are now waiting for the 4th touch of this level. And currently, as of a little after 11 p.m. Eastern Time on August the 31st, the Dow futures are trading higher around 70 points, which means back to this previous resistance point within the right shoulder. And they don't have to always be perfectly nice looking head and shoulders pattern, although this one is a pretty decent size pattern. But for now, this trend line has obviously been broken on the gap higher. There's been a lot of negative feedback within the stock market. Now, the price objective for this pattern, if it transitions into play, it may not, is we take the bottom of roughly a little over 99.50 and the top at around 10,150, and we subtract the difference of roughly almost 2,000 points, and that should give us a price objective roughly a little below 9,800. After all, it's a short-term pattern, so you can't expect that large of moves to happen within it. Now, the second head and shoulders pattern is a little bit of a bigger one than this one. It is the one on the daily time frame. And this is the chart here. So the left shoulder would be right in here. The head, there's the head that goes down towards here, and now we have our right shoulder. Now the neckline on this particular head and shoulders would be the ones that connect this area, therefore roughly at about 9,900 or so would be the neckline for this particular head and shoulders pattern. This reddish looking line is a volume weighted average, sort of like a running average, but it takes into account what the volume happens to be. And since its top in April, it was resistance, resistance, resistance. And then what's very interesting is when you have the levels of resistance tested, which they should be, and they make a nice higher low like they did in this case right in here. When you get up to it, you have good odds of taking it out, which is exactly what happened. It took it out. Therefore, the key area where it needed to find support was right in here, roughly between 10.4 and 10.3, but it did not. And oftentimes from failed moves can create fast moves. So it is really, really looking as if this move is that of a failed move. Question is, how big of a fast move is it going to be? We've been seeing it thus far, that of a fast move. Now, head and shoulders patterns can also be inverted, and This would be an inverted head and shoulders pattern in here, a little dysfunctional more than anything, but still, it was an inverted head and shoulders pattern. It broke the resistance and then was not able to find its key support. And that's showing a lot of area for caution. The 50, 100, and 200-day moving averages, which are not shown on this chart, I talked about them yesterday. They are showing many reasons for caution within the Dow Jones. So the price target for this particular chart, we take the neckline of roughly 9,900, the top of roughly 11,200, and that gives us a difference of 1,300 points, which we can subtract from the neckline, and that gives us a price objective in the area of around 8,600. Now, this pattern may not form itself, and if you know otherwise on a fundamental basis or some other form that it's not going to happen, well, congratulations to you. But the majority of people don't. And right now I'm seeing a lot of optimism within the mainstream media for stocks, and because of that, I would generally tend to think of the opposite. So now to finish off the trifecta, what we're going to do is bring in the third one, and this is the head and shoulders pattern that is forming on a much longer term time frame. This is the left shoulder. We have the head and a right shoulder, which is pretty much only forming. We're at the halfway point maybe of this right shoulder. For if we do a pattern that brings us down towards this 8,000 area, this could be a very, very deadly head and shoulders pattern. The VWAPs on here, and there are two, one from the '07 highs of 14,000, and on the way down during the 2008 run, it was resistance. And what we have seen is it's trying to hold as a level of support. As far as the other VWAP, that is from the 2002 lows, which has never been support. Never. Broke right through it in 2008 with the heat of the financial crises. It's gotten back up to it. It is finding resistance at this level. So this is a very, very crucial stage right in here within the VWAPs, because you have this one which was declining, flattening out, trying to find support. You have this one which was rising, now flattening out, trying to find resistance. And some people may say, you know what, the stock market can't go down lower. And like I say, maybe you have information to be right, or you might end up being right. But if we've seen a big sell-off like we encountered in 2008, from a high of 14,000 to 7, losing half of its value, if we lose half of our value from 11,000, then that takes us down to 5,500, which would be a huge, huge blow to many people's 401ks and investment and retirement savings. It may not happen, but it also might. I think ultimately it wouldn't be a surprise if stocks go way higher because of the inflationary trade. Once again, I don't know if that will happen. That's why they don't call, wait a second, yeah, they don't call this casino gambling, although it really is. So that's why it is gambling, and that's what the reason why they don't tell you is because, well, they want your investment money. And that's my opinion, and just leave it for what it's worth. So as far as a price target, the breakdown or the neckline is that of roughly 8,000, and the previous low going below 6,000 in '09 was a failed move. Oftentimes failed moves bring fast moves. There's the fast move. And I've also been stating about failed moves equals fast moves, and well, that's pretty much a guarantee that a failed move is going to happen. because either this entire massive sell-off that we encountered is going to be a failed move, and thus the fast move should bring us back, heck, maybe even past above this 14,000 level, or this rally will be that of a failed move, which means the fast move would be heading lower. So with a neckline of 8,000 and a top at 14,000, the difference would be 6,000. And this is where you really can't use the difference in price because, well, at some point you can go to negatives if it was high enough. Say, for example, if the neckline was 6,000 instead of 8,000, that would be a reduction of 8,000 points, which would bring you to negative 2,000. That can't happen. But as far as percentage losses are concerned, the move from 14,000 down to 8,000 was roughly a little over 40%. Therefore, that would bring us roughly to about the high 4,000s area as a potential price target on the head and shoulders pattern. And you can see it better on a logarithmic chart, which I'm going to put on the screen now. This is the same chart, but it's logarithmic. And with the breakdown of this level, if we calculate its move and match its move from top to bottom, then you can see that it gives us a price target heck down to about the 4,300. That's using a neckline of actually 7,500. And I guess if we use this neckline from this high, then it would give us a price target of, well, 4,200. Using the same moves from the top in 2007. But I could be wrong. Maybe we will never, ever go there. Time, of course, will only tell. Thank you for watching this video. If you have any questions, please leave them in the comment section below, and have yourself a magnificent day. Bye-bye.